Time to go back to these ETFs. Weldon Rice is with us, head of AI ETFs, Kraft Technologies. Thank you so much for being with us. So you have the Kraft AI Risk Indicator. It's been jumping. Tell us some of the details, how this matters.
Sure. Thank you, Nicole, and thank you for having me on. Apart from our ETFs, we also have several different models for different things, and one of those is a risk indicator, which we actually publish on our website weekly. And so this risk indicator is actually looking at the risk for the coming week, and really, as we came into April, we've seen quite a big change, and obviously markets have changed quite a bit. From April, first week of April, we were at zero, which a score of zero means to be fully invested in equities. Any score with a number, for example, like last week we went to 7, would indicate the AI model is indicating you should hold at least 7% of cash equivalent safe after that, something like that. So obviously a higher score for cash would mean more risk in the market from the model. And we saw this week it jumped up to 34. That's the first time that's hit that level since October of last year. So when we look back at the historical returns of the risk indicator in terms of where do we sit, is this like a risky place? Is this not a risky place? We generally code or put this in a category of cautious, because for example, back in October, it hit again up to around 34 or 36, but it went back to zero just right at the very first week of November, and that's when the market really went on a bull run. So it's not necessarily saying where a market crashes in a minute, but it is telling investors that there probably should be some caution heated in the market, at least for this coming week. And I think, as you just noted, today markets are again down after an opening up in the green and trying to be bullish. So we'll see how we end the week, but it seems that after today's release of the PMI and the jobs reports, it seems that good news is bad news again in the market.
Right. Yeah. So when we see the market risk indicator, it's not measuring risk appetite, it's measuring risk for pulling back on the markets. And it really moved very quickly. So it's not only hitting this new high level of, you mentioned 34, highest since October, but also this trajectory, it sort of got there fast. And that's the other thing. I think people were, a little tepid or complacent in the first quarter. They were excited to see the up arrows and sat back a little bit, and now they're facing a lot of volatility. Tell me about some of the positioning in some of the ETFs. You have Kraft's QRFT and AMOM, another. Tell me a little bit about some of the positioning there and your recommendation.
Absolutely. So our funds, AMOM and QRFT, QRFT is a multi-factor large cap ETF, holds about 300 holdings, and AMOM is a momentum ETF holding about 50 holdings. We rebalance that portfolio about every month. So we get a new look at the market, a new look at what the AI is seeing in the market in terms of how it's analyzing the data. Currently, all of our funds that we have at Kraft are signaling to invest in technology. So most of them rebalanced at the beginning of the month, again, when the market was a little bit different, a view that we have right now. But it has been invested in tech, especially AMOM, for the last year. So pretty much, year to date, AMOM has been 50% in tech for the whole year. And we've seen some of the holdings that we're looking at in the portfolio include most of the Magnificent Seven, or as some like to call now, the Fab Four. So for example, QRFT has significant holdings or the top holdings in Apple, Amazon, Meta, Google. So most of the holdings there are mostly in tech. and that's where the model sees the most opportunity at the moment. We will rebalance the portfolios again next month, so it'll be interesting to see if the models have a different view depending on how the markets go for the rest of this month. As noted, the Magnificent Seven, we're going to have earnings reports coming out next week. So let's see how the market changes and shifts with the new data. It seems like every week, every day, the market is sort of ingesting and adjusting to how they think the Fed is going to move this year.
Yeah. Quick thought on AI. We had a great conversation earlier. I spoke to the CEO of C3 AI and all those applications that are helping businesses. How do you think AI will change the future of investing? What people could do to get ahead of it?
Absolutely. When it comes to artificial intelligence, we believe this is truly one of the future of investing. And one of the big reasons why, even myself personally, why I believe in artificial intelligence and the opportunity that it has for investing is simply because, when you look at these markets the way they are right now, it's so easy to get caught up in the emotion of it and, worried about different geopolitical risks. What's the Fed going to do? There's so many things that are really uncertain. And what AI is actually good at is not actually, what AI is not good at is really predicting the long-term future of, what's the Fed going to do? But it's more like, I heard a great analogy. It's more like giving headlights in the dark. We can't see very far ahead, but it's trying to give the best, make the best decision with what we can see in front of us with the lights. So I definitely think AI has great promise for many areas of investing, not only in terms of building models like we do, but in terms of being able to provide investors with more data, before, sifting through data, using like ChatGPT like functions, finding data faster. So yeah, I think there are immense opportunities, and in terms of where investors can get ahead, one is just by learning and trying yourself. There are a lot of different applications to learn and try, and I think there are probably two different ways investors can incorporate it into their portfolio. One is through thematic exposure, investing in those companies, and two, leveraging the technology like do to select the stocks in the portfolio or asset allocation. There are multiple different ways. Risk management is another area where AI is making a large impact as well.
Weldon Rice, head of AI ETFs at Craft Technologies. Thank you so much for being here.